Hi, everyone. Thanks for staying. Hopefully you're hydrated and fed. We will have Ben from Bankless Ventures joining shortly. I think he's stuck in local traffic, but no worries. So this is a unique panel in that we're bringing entrepreneurs and VCs here to discuss traditional VC funding in a non-traditional space. Now think for a moment how your project or protocol has been funded or how you will be funding your project. If you are part of a fund, are you thinking of alternate ways to fund or allocate your funds? Before we get started, I'd love for you to introduce yourself, the project you founded, or the fund that you are managing.
Thank you. So I'm from Reach Protocol. I'm the CEO and founder of Reach Protocol, also the system architect. So we've been building this essentially a zero-code virtual machine for the past 3 years. I think 4 years to this point. And we've been staying in stealth mode, and we've been working with like VCs and also hackathons. Some of the public chains like indirectly to sort of like bring what we called high-energy individuals, which are, I guess, dreamers in this context, to finish their product and bring it to market. So yeah, that's for me.
No, hey everyone, I'm Stanley. I'm the head of research at MetaWeb Ventures. So MetaWeb is a crypto VC, started in 2021, and I joined the fund around the same time. So we invest in every vertical, in the space. And at the same time, I'm also building a incubated project by MetaWeb. It's called Sim Finance. So this is our merch. So yeah, it's a DeFi protocol that's gonna launch on Arbitrum in December. So yeah, I'm like on the both sides of the table, bright side and dark side. So yeah, so after being a founder, now I regret ghosting people when I was mainly an investor. So I guess life comes back to you, eventually. Yeah, but that's about me.
So we have a unique perspective here, one founder and one member of a fund. Can you talk about the capital required to go from an MVP to a go-to-market product?
Usually, so what we do is that we do a lot of sort of like helping not only helping the founder to get the product design out and also help them to build the so-called MVP, but what we found out is that especially for like DeFi project, like the MVP and the actual product, maybe the difference is about like 20%. If we're talking like, let's, for example, like the early version of Uniswap and AAVE and then the later version, there's not that much big of a difference. So that's one thing so basically like the cost, sometimes they would go to like outsourcing companies and usually that would cost them $50,000. And this data is something that we get from, interestingly, like around the world is the same number. So like Romania, Beijing, Vietnam, and
Poland.
Africa.
Poland devs. Polish devs.
Yeah, like so we would reach out to outsourcing to know what the market is, and it's somewhere around that. Yeah, and so to go to market, I think there's more effort that needs to be put into in terms of like operation and stuff. So I think that would vary from project to products.
Let me ask one follow-up to that before we move to the VC side. As a founder, how do you do diligence on whether or not you're paying market price? And how do you make those decisions when you're outsourcing, evaluating teams from different cultures or
This is actually a pain point, especially when we're working with VCs. Like we would sign NDA and stuff. And every single time we work with VCs, like it's always like goes like in the 30 days. In the first 30 days, they'll be like, oh, I want a lending protocol on blah blah blah, public chain because there's gonna be a new thing this quarter. I've talked to their founders, and then after 30 days, and they'll be like, you know what? Let's do LSD, and. So that happens a lot. Like I'm talking like big partners in VCs, and which is fine. I think it's okay to be opportunists, but they were paying the price. If they're working with an outsourcing company, and then the company will ask them to, okay, you got to start paying all over again. So and sometimes the projects died because they don't want to, because maybe next month they will change again. So. So the reason why we success is that we kind of like have a sandbox for them because we know they're gonna do it anyway, and we go like, hey, you know what? Like we're gonna get it built like with 6 to 12 iterations in the first 30 work days, and probably it's gonna turn to something else. Like one of the projects that we did on the public chain that won the hackathon this year, like in the first quarter, like starts as a lending protocol, and it ended up being a liquidity provider aggregator, which like. And it's very normal.
Stan, would you like to add from your perspective?
Yeah, sure. I guess from like, cause I've been working on on both sides. I would say for a product, like concept is always the easiest part probably. Like especially like in DeFi, you can have micro innovation just after a brainstorming, and it's not that hard to just to just build a toy model, right? To kind of like validate that, but in order to make it into a real product, you have to first you have to maintain a stable team, right? You have to find people to actually develop that, and also.
What do you think the cost is of that? Like, what are you allocating?
It varies. Like I think like people have. I mean, there are teams who just self-fund themselves, right? And there are like many teams who actually don't pay a fiat salary, right, to their core members because they're all just they're a startup team and they're all trying to capture that highest upside after they launch a token or whatever, right? So I think that's kind of different, but there are like costs that you have to pay, like because like not every member can become a core member. When you need graphical designers, you need marketing teams, and you need community managers, and they can be actually expensive, in the current environment, but they are actually essential. And especially when you enter a later stage, when you need marketing support, when you need ecosystem support from different parties, and you realize that hey, you just you kind of just need a budget for that.
So what's the tipping point? What's the point where you move budget from MVP and go to market? Like, what's the budget differential?
Yeah, I feel like it's. I think like the tipping point is like when you actually feel it's something real. Because like when you're like building a protocol, in the first like 2-3 months, you're kind of like, unsure about, am I gonna actually make this happen, right? Like it's totally possible that after a couple months of exploration, it turns out to be a failed model. But when you realize that hey, this is something we can actually launch on chain, it's something that people will actually use, and that's when you kind of shift your allocation, from maybe development to like gradually to marketing to
But as a VC, how do you know that you're not putting good money on top of bad money, or not bad money, but like when do you know that it can't be just intuitive?
Well, it's what we do, right? To be honest, it's more of I think there are like metrics that you can actually track. Like our way is we tend to work with founders for a period of time before we actually make decisions. I'm not saying like we're gonna just get super involved in development, but we at least we want to talk to them, and and there will be like back and forth. There will be like like tasks about like your business plan, or I want your like financial status or whatever, and through those processes, we see how they deal with stuff, how they actually treat everything. So I think that's how we actually make sure invest in the in the.
Let's talk about metrics. Who here is building a project? Who's a founder? Great, Max. Awesome. Okay, so let's talk about these metrics. How do you increase the chances of building a successful project? What metrics have you used or are using?
Yeah, for us, it's like first we want to track their, how diligently they are, in terms of just building it per se. Like, ideally we want to do a tech DD on their GitHub repo. I want to see how hard you're working and how fast you're iterating. And I think that's definitely one of the metrics that you can track before product launch. And also, I think team is very important. I mean, like, we are fine with smaller teams, bigger teams, but I think like team member and burn rate is definitely a vital metric for us to actually use to evaluate the the capability or the competency of a founder, right? How well can you actually manage your team, and also your future plan, and does it make sense, and are you controlling burn rate in a reasonable way? I think that's a very, very important metrics, and that reflects how well they will do business wise in the future. Yeah.
And Max, we were talking before this panel started about metrics, very detailed. Share that with the audience.
Yeah, so I work with a lot of founders, and there are some painful founders where I have to kind of like give up working with them. There's only like two conditions. Where the first is that I find out that he's a bad person. Like, it's okay to be opportunist, but like sometimes they would, especially like I meet a bunch of guys in hackathon, they would do something that I can't believe that I'm witnessing it. And then the second thing is that they have a like big ego, which is fine. And but it prevents them from stress testing their idea. And so the metric that I have is the iteration that you can do in 60 work days. And so it's like, so because I work with clients all over the world, so there's something that we can share. I can share, which is very interesting. So for American founders, it always goes like, oh, I don't know if I'm gonna get caught. I have to look into the regulatory stuff. I was like, sure, like this is 100%, man. Do that first, Shut up. Like, I know this is a hard time for American VC and American startups. Like, let's make sure that you don't end up in prison.
They're scared for a reason.
Yeah. And it's like, can we do the token thing? Or I was like, do you want to get rich or no? I was like, and then of course, you want to be one of those projects that only use blockchain as a decentralized database, which like there's a bunch of those projects in 2018. Okay, so if you're one of those projects, I can send you directly to the public chain that you need to work with. But if not, let's make something that makes sense, because it's not 2018 anymore. So, and for founders in Africa, this one of my favorites is that like the infrastructure is actually not that built yet. So there's a chance where, for example, I have a project in Nigeria, and they go, we kind of like started eating out, and we didn't have the face of like a mobile internet. So basically, the product that we're building for them essentially it's LBS-based order book infrastructure protocol, which is kind of like we make an extension of ERC 721 where it supports like order books and build it on a blockchain that's like cheaper for like higher transactions. So it's a place where, by the way, like Nigerians, they're super proud. Like they always told me, oh, we're the best in Africa. We're the number one. And I go, yeah, sure, man. So what? And so it's kind of like, I think there's a chance where this is also like the CZ from Binance was believing back in 2019, where he sent 30 Chinese engineers to Africa to do incubation. Is that maybe like there's a chance that Web3 could be become more like relevant in terms of like having mass adoption. There's a possibility there. And then we have other projects from the Europe where it just really depends on the founder, like personally. And the first thing that we tend to try to figure out is that their work ethic. Because I work with a lot of founders, they just go, hey, you know what? Sounds great. Let's have a meeting like 2 weeks later. And I go, okay, like we work like super fast. So the MVP, once we finish talking, like it will be out in 30 days. And like the fastest time that we did was like 16 hours or something. And it was it's not just the MVP, it's like go-to-market ready. So yeah, I think it kind of varies.
Do you find that some cultures just don't work at that speed? I mean, that's...
I
I mean, the
Can I
answer
say
is
it?
no, you can't, but you can.
Well, no offense, but when I'm talking to French people, I would like to say like let's what's your definition for work-life balance? Just So okay,
It's important. We're not bashing, but I think that's without digging into the details.
So
that is an
not
issue.
like one of our co-founder was from France, and he's a super energetic guy. So I think a lot of people are high energy individuals, but I see some founders I just wouldn't work with them. Is that like being an entrepreneur for them is kind of like a fake thing. It's like something that they put on their profile when they're swiping Tinder. Like I don't have time for this. So
yeah,
that's like the kind of people.
Totally get it. So. Oh, great. Okay, thanks, Ben. Oh, okay, great. Okay, so thank you. Oh, here.
If
you could. Oh, it's working now.
I've been in the building for 20 minutes trying to get on the elevator. It's cool. Hey.
Thank
gang.
you. Well, welcome. We're discussing. We have a split here between representation of venture capital and a founder. And we're discussing traditional VC funding of projects in a non-traditional industry. And if you could kind of elaborate on your work at Bankless, how much assets under management you have, and talk about the unique position that Bankless is in.
Sure. Hey, guys. Ben, Lakoff, Bankless Ventures. We just announced this year, raised $30 million. New fund, but all of us have been investing in the space for a while. That's the TLDR.
Do you find that there is an opportunity in Web3 for various types of funding that you're not seeing now?
Yeah. Just show of hands in here. How many people are founders? Or investors? Other? Yeah, cool. Yeah, I guess with founders, I think an important thing to remember is like, just because you can raise money doesn't mean you should raise money. And just because you do raise money doesn't mean you need to do it from traditional methods of fundraising. So there's many different types of non-dilutive financing. You can sell an NFT, or you can do a bunch of different grants or things like that. So there's kind of other avenues as opposed to like traditional venture funding or debt or something like that.
Would you like to add, Stan, Max, traditional versus non-traditional financing in Web3? And the frame of reference is, we're upending privacy, payment rails, storage. Why aren't we upending the actual financing of our projects?
Yeah. So from my experience, so first of all, like the project that I work with, every time we took, there's two business models that we either take the equity or we take 10% of their gross sale. In terms of token sale, whether it's on exchange or it's on VC. And the second thing, I 100% agree that I just met some founders, and we kind of have like a close group where I help them out a little bit, being resourceful, and they say, hey, Max, really thankful, so I'm going to tell you how I got where I am. And he goes, I go to 500 VCs and I ask for money and I just don't pay it back. And I go, wow, that's dope. So, and it's not just one founder. Like I've met several founders that told me that, and they basically goes, this is where like I'm doing VR, I'm doing metaverse, whatever. I don't give a fuck, and I'm just doing this because I can raise money and I have to pay back, and they're gonna come to me, but they can't do anything to me though. So, and you gotta know some pick up. I'm saying like the truth, by the way. I'm not gonna say who.
This is the unconference, right?
Yeah. So, and they say it just kind of like help me out, and I go, I used to do hedge fund. I raise money from the bank, and it's a debt I have to pay it back, and I like to make money for my investors. So thanks for sharing though. And you know what you have to do, like those VC people, they have big egos, so they have their blogs. You log on their blogs and see what they're writing recently, and you kind of, I was like, dude, okay. So there's, I try to avoid working with those people. I think they're great. They're great people. They know how to raise funds. Shout out to them. But I tend to like to work with people who actually like want to make the product work.
Well, it's like play long-term games with long-term people and stuff like that. Probably are gonna. I mean, your reputation is everything, and just like if you are an investor, this is why you ask for reference checks or do a Google about the founder before you give them money, because that's terrifying.
Yeah.
Jump in, Stan.
Yeah, I mean, I'm a big fan of non-traditional funding, like kind of like IDOs or just a more decentralized, I would say like C-round investments. I think
Could you explain that?
Yeah, I mean, like they are. I mean, we have seen many projects, especially on Ethereum. I think which are in fair launch. They just raise money from the public. They do an IDO and then they give you a locked token, and then after a couple of months, the project goes live, and then you can get a token, right? So I think and I'm actually a big fan of that. Some of my favorite projects actually were launched in that way, like Cat in the Box, and I think there are others. I think the point is like not many projects have the privilege, to actually pull off a successful non-traditional financing round, especially before you have a product. Like this is like it's a chicken egg problem. Like you need money to develop for development, for audits, for marketing, for everything, and it's just impossible, almost impossible, for you to communicate all this to the public before you have an MVP, right? It's almost impossible for retail users or a non-VC to actually judge like how good you are without some concrete proofs. And if you have those concrete evidences, then it's going to actually make it super easy for you to actually raise money from VCs. If you're a successful serial entrepreneur from a successful protocols, then it should be fairly easy for you to raise money. So it's only those, maybe like those type of people, or those more like like protocols with a bigger recognition, bigger community to actually do non-traditional financing. And for for smaller teams, for nobodies, it's just so hard for you to just communicate with the public before you have something. And if you wanna if you need money for everything for your product, then you have to go to VCs. And so I think that's the kind of like the dilemma we're trying to. I mean, people in people in crypto are trying to at least solve or alleviate. So I'm looking forward to actually to new mechanisms and protocols for that. Yeah.
Let's talk about the role of investors in the ecosystem. And I'm looking at you because Bankless is an anchor in where we get our news, and we all feel like we're friends with David. And even though we might not know, some of you might not know, but I've been told that investors kind of feel like they're on the peripheral and they're not full-fledged members of the community. Do you feel that way? Do you feel that way? Do you feel like you've got a say in the ecosystem other than just funding projects?
Perhaps for other investors, but yeah, like you said, I mean, Bankless has been a media, like a thesis-driven media company. They've been investing, but never with outside capital. So very much feel part of the ecosystem. For us personally, what's that term called when people like listen to somebody and they feel like they know them, but that person doesn't know them? It's like the one-way thing. I forget what the
I
term
don't know,
is.
but I feel like that with them.
But yeah, it's got to be so weird for those guys walking around because they're like, I listen to you every morning. It's like, I have no idea who you are. No, I mean, we feel very much part of the community, but we've been a VC for like less than 6 months. So I don't know, come talk to me in 5 years.
Max, Stan?
Yeah, so I do think like particularly this year, I just say what I witnessed is that especially a lot of the VCs in Asia, they started to running out of fund. And
Run out of funds.
maybe because of FTX, I don't know, but they don't want to show it. And what they instead start doing is that they start to either cooperating with me, or they hire a bunch of coders where essentially they incubate or make projects, and they don't say it; it's their project. They hire a CEO, and a majority of them were in Singapore, and they start raising money from their peers. So they basically became, and it's there's so many of them.
You became an incubator.
Yeah, they claim that they are an incubator. I do some. It's not hacker house. What is? It's like yeah, something like that. Yeah, but
Repeat that again, Stan.
Accelerators.
yeah, exactly. And yeah, basically they running an outsourcing company, and they pretend that they were advising a project. Actually, they make them. So I don't know. Like this is like where
this
they.
Is like
join.
a Web3 confidential. Instead of kitchen confidential. I feel like I'm learning a lot.
We signed at least 1 year of NDAs with all of the VC that I work with, which is understandable. Like some of them. So here's like, for example, in a particular area in China where, the capital of China, Beijing, where you can find a lot of people with money, and they know Bitcoin, and that's it. So it's very easy to raise money from them. And so the game goes, the GP would actually cook their books by doing some projects, and they would have some returns to show on the portfolio. And when the bull market came, they're just going to raise money, and that's the end of it. And they would just take the management fee. So, yeah.
Well, I don't think like the less money being deployed from VCs is only in the Web3 space. Certainly in the Web3 space, but also like there's some macro factors. But if you like 2 years ago, $10 billion deployed into Web3 venture funding companies. 2 years ago it was 15. Last year it was 22 billion. This year, 2? I mean, as of May, it was 0.5, so 500 million. So like that is a very steep drop off. So it's not just isolated in Asia. Like you kind of get used to this pace of deployment, and yeah, we've got a $50 million fund. We'll raise another $150 million fund after we deploy this in 6 months because that makes sense. And it's a venture fund, but it's structured as a 2-year like hedge fund. Totally makes sense, So I think we're like the maturation of the venture industry in crypto, but it's also like outside of crypto, the money's not as easy or as free flowing as it once was.
The conference is called Dreamworld. Think for a moment how you would dream about the future venture capital in this industry.
More attractive valuations.
God willing.
That's a good idea, yeah. That's actually what I think as well.
No, like long-term people thinking long-term, yes. Solving real problems, really thinking about building products that solve real problems and change the world in a meaningful way at an attractive valuation.
100%, yeah, I totally agree with that. So the founder that I actually genuinely work with, where I actually invested in them, I just always tell them this. I say, we're going down a hard road. So you're not one of the 50-year-old guy coming down from Wall Street. You want to sell your resume and talk to 500 VCs and get something out of it. Like, let's build something meaningful, and it's going to be hard. And what I can help you do is that let's really minimize the cost, because the cost structure of your project is important when you're going to get listed on exchanges. Let's be honest. Like, they're going to you have like 20 VCs, and they're all like, I don't know, like 70% of them are running out of money, so they're all going to dump. Like once the project gets listed, the exchange is going to say no. But what if you have some actual long-term investors that are willing to lock, I don't know, like maybe longer times. And also they didn't put in that much. I think it's healthier. So this is where I'm going at dealing with those founders, and I really love them. I have a new founder who's a rapper. He had a cooperation with Snoop Dogg, and he talked to me like, hey, yo, I can get you a collab, which I don't like, with any rapper in Bay Area if you want to. So they were the MCN, and they go, we want to make stars. And the first meeting was like, he started talking to me about nonsense. We are AFT, that's the only word that he knows. And I go, that's great. Let's start from there. And with like several meetings, and he get better and better. So it's probably going to turn out to be like a musician launchpad, and we're still working on it. I hope he succeeds. You know.
Stan, what's your dream?
Yeah, my dream is better investor protection. 'Cause right now, there's no protection. We're just it's all trust based, like relays, like PBS. It's all trust based. You sign a SAFT, you sign a safe, but actually it has zero legal meaning, I guess. Yeah. So I'm expecting more Web3 native on-chain investment scheme to be made possible, so that we can just both parties will be better protected. Yeah.
Last question. Where can everyone find you? What's your handle?
Me personally on Twitter or anything is at Ben Lakoff, and then Bankless is Bankless VC.
Yeah, we've been staying stealth for 4 years, and this is like the first, like within this for this.
You're no longer stealth.
Yeah, this is yeah, not anymore. Yeah, I have an email which we could probably exchange after this, and our website and everything. All of our clients are going to become somewhat visible starting next year first quarter.
So we have a website. It's metaweb.vc, and you'll find my bio there. And I have my Twitter. I live on Twitter, so I look at DMs. Yeah.
And I'm at Batt Girl on Telegram, Twitter. Max, you had a question.
Yes.
Here.
Yes. So this is sort of transitioning to a theme of a few other talks that are coming up in the afternoon, but I'm really interested to know from the venture perspective, from the funding perspective, and kind of tying into what Stanley just said about investor protection. There's a real desire for many Web3 projects to build in the open, to be open to contributions from everybody, to be open in governance, to be open in returns for contributors in many ways. How do you, as venture investors, do you invest in open source projects? How do you remain, responsible to your LPs while doing so? And, without taking away from the core principle of making sure that it's open and getting everybody involved, how do you make sure that you yourself also still get some kind of say in the project? I think it's a very difficult thing to balance.
Who would like to take that first?
Since I know Max, I guess Danny is a better person to actually answer this question. But to be honest, I think it's really about how VCs become engaged in the space. I think I think we were talking about VCs are feeling they're peripheral to the industry. I think a VC shouldn't I'm not expecting to be respected solely because I'm a VC. I don't do that. I think I want to be respected or recognized as a researcher, as a DeFi degen, as someone who actually work with founders, as someone who's building something. And VC is just a way to to build stuff. And we're it's like finance. Finance, and people are saying finance are not creating real value, but at least VCs are trying to help the industry by picking better projects. So, but for better doing that, I think VCs should be more engaged in the culture. Meaning, we should just build more. We should just participate more in DAO governance. We should actually I would say allocate more resource in the in open source projects. I think that's definitely one of the weakness or the weak points that we're seeing right now, because obviously open source projects they tend to not bring money, but they are probably the most important parts of the industry. Not only Web3 but the whole internet lives on a couple open source projects. And I think for VCs, for really good VCs who actually have a vision and who wanna grow with the industry, and then I think investment in open source projects should be in their mandate. And obviously that's not something that personally I can change, but I think that's definitely the direction that we wanna work towards, right? Yeah.
I'd just add, like, philosophically super aligned with more open source, but obviously there's like some concerns about moats and defensibility. So ultimately, as an earlier stage investor, I'm investing in smart founders that are dealing with that and kind of balancing how much of it is open versus closed and how those two marry together.
Thank you all for your time. Thank you, Dreamworld, for hosting this panel, and enjoy Istanbul.